My name is Rick Sadler. I'm with hitandruncandlesticks.com. Here, let me do this over here. You can come over here. This is my website, hitandruncandlesticks.com. I want to urge everyone to please check out the free trade idea. Doesn't cost you a thing. Just simply click on that and you'll get free trade ideas every single day. Alrighty. What I want to do is I want to talk about my personal favorite trade setup, and because we're intraday, in other words, the market is rolling right now. Who knows? We might see something that's tradable. We might see something that's workable. We'll see how it goes. I got lucky enough to catch the coin toss that got us right here going into the close. So I'm very fortunate with that, and I want to say thank you. Thank you, Reed, for having me here, by the way. All right. I'm a swing trader. I 100% look at daily charts. I do peek at intraday charts from time to time, but believe me, that's not my focus. I do peek at weekly charts from time to time, but it is not my focus. It is absolutely the daily chart that's my focus. Oh, real quick too, I want to say thank you to TC2000 for their chart system. That's what I use for my charting, and I use NinjaTrader for my trading, to actually place a trade. The stock pattern that we're going to look at, chart pattern we're going to look at, I call RBB for short. It's a rounded bottom breakout, and what I'd like to do is we only have 45 minutes, so it'll be cut quite short, but I'll show you some trades and show you why I like them, some entries maybe, some exits, things like that, and we'll just go from there. Alrighty, let's go here. I have ecom up, and I want to take a look at ecom because this right now is set up for a buy here. And what the rounded bottom breakout is, let me come through here, shrink my screen up a little bit. What the rounded bottom breakout is we're looking for a definite downtrend, absolute downtrend here, and then we're looking for some basing, and then we're looking for this chart to start turning up. Here's another thing with the rounded bottom breakout, and I apologize for hurrying, but we are time crunched. This is typically a half a day seminar. I'm going to try to put in 30 minutes. So with the rounded bottom breakout, our target direction is always the 200-day simple moving average. There are no exceptions to that. Always the 200-day simple moving average, and that's what this line is right here. So what we're looking for is this to start to turn up, and when it gets over what I call the big three is the 20-day simple moving average, the 34 exponential moving average, and the 50-day simple moving average. Because we're in a downtrend, and I'll show you some other charts that actually look a little prettier as far as those moving averages go. But when you're in a downtrend, the 20 and the 34 are tracking below the 50. All the scans that, well, not all the scans, but the majority of the scans that I have, finding the early onset of the rounded bottom breakout, the moving averages are set up that way where everything is below the 50. When we have a breakout of the 50 is when it becomes a rounded bottom breakout. And once it breaks out of the 50-day simple moving average, you know, there's all sorts of other chart patterns we might look at, and the charts we look at, I'll point them out on what we're looking for. We're simply looking for the trade to go from that 50-day simple moving average area up to the 200-day simple moving average. Now, for a swing trader like me, and I consider myself relatively a short-term swing trader, but I don't have a clock. So at the end of 2 days, you know, a big alarm doesn't go off and say, uh-oh, you better get out of that trade. Or it could be 2 weeks, or it could be a month. Yeah, more than likely you're not going to see me in a trade for 2 months, but certainly have been there for a month. Well, I don't care about that timestamp. What I care about is that I have a potential trade of approximately 27% right there. The approximate trade here, 27%. Now, I can't speak for every trader out there, but I would guess that most swing traders would be ecstatic for a 27% trade in a few days to a few weeks maybe. I think most traders would be absolutely ecstatic with that. So that's what I'm looking for here in Ecom, and Ecom just made another new day high as we speak. Now, I want to show you, it's only fair to show you a rounded bottom breakout that has failed, because we all know that chart setups don't work every time. We all know that there may be a specific chart pattern out there, whether it be a breakout of a wedge, a candlestick signal pattern. We like to think they work out 100%. We like to think that a bullish engulf works out every single time, but the reality is that it does not. And this rounded bottom breakout, there's no exception to that. It also will fail. In fact, right here was a rounded bottom breakout, but you can see how it rallied up a little bit. It actually failed, and then it became a rounded bottom breakout again. It actually failed. And this is what I would call the construction area, just basing out. Well, all of a sudden now we're starting to get a breakout over these highs right in here. That could be something that tells us this is ready to run up. Also, we've got this kind of a doji Hiromi type candle with a gap up, and then a nice little J hook or continuation pattern setting up with a bullish engulf coming off these series of dojis here. So this might be a clue that this particular chart is ready for that 27% move. This is one that very well might be on our watch list tomorrow that I send out to members. And it might be the featured trade idea, that if you sign up for the featured trade idea, you'll receive that on the emails every morning. You can also get them in the website. Ecom just made another new day high. I want to show this here. You can see Ecom just made another new day high. It made it on something we call 1.1 times normalized volume. Sorry, I do not have time to get into this today. But it's also, because this number over here, this tells me it's breaking out of yesterday's volume as well. So this chart here is looking very good. Looks like an excellent trade at this point. All right, let's take a look at a couple of others, and let's look at Tahoe, T-A-H-O. This is a rounded bottom breakout. I want to go through mechanics real quick. You can see we're in our downtrend here. You can see how the 20-day simple moving average is below the 34 exponential, and the 34 is below the 50-day simple moving average. This was a rounded bottom breakout right here, but it failed. It continued to move down until we started getting a little bounce in here. Let's see, are we close? Nah, we're not even close to a double bottom there, so we won't even look at that. We hit the bottom, we made a high, and then we came back down. That's another little pattern we follow a lot. But I'm not interested in it right here. Where I'm interested in it is when we broke out right there. That would have been a very nice play for a rounded bottom breakout. And then from there, there's so many other chart patterns you look for. Because we know, as traders, we know this chart, that may be your target, but we know it's not going to go in a straight line. We know that. We've been trading long enough. We know to no longer wish that. You know, if you think back when we first started trading, we had all these great ideas of buying a stock and then having it just rip right up without any idea that they were going to pull back a little bit like this. We had no idea. And when those pullbacks started to happen, we would just freak out, and we just didn't know what to do. We ended up losing our money. Well, that's what happens to new traders. But over time, we learn these things. We learn to accept these ideas and these ways to trade. And we learn to realize that, yeah, that may be the target area up there. We can line that area or an area over to on the left, maybe gaps, fills, or voids. By the way, I'm not saying that is the target and that's it. it just above the 200, it becomes a different trade. We no longer call it a rounded bottom breakout, just the rounded bottom breakout. We just use that 200 as a directional target. We certainly look to the left for, like I say, gaps, for maybe for voids, resistance, suggested areas for price to move to, and then fail, because that's where we want to take our profits. So here's Tahoe. Tahoe would have been a great entry on this very first day that it broke out of the 50-day simple moving average. You could have bought it the very next day. In fact, you'll find that if you're in our trading room in the mornings before the market opens, I go over stock picks, and what I'll do is I'll draw something called the buy box right in here. And if this was, if Tahoe, if the end of the day here, what day is that? The 27th, April 27th, then the very next day would be out there for a stock pick for a rounded bottom breakout. I would put that buy box on there. There'd be a stop. There'd be the top line number where you can certainly buy on the breakout, but I look to buy on inside days or inside the buy box. And if you would have bought, let's just split that box in half, you know, depending, some people would have bought it better, some people would have bought it worse, but if we split that box in half like there, if we ran up to this area right here, that would have been about 16.9% profit. But let's face it, how do you know that's going to fail? Don't let anyone kid you. Nobody knows. So if you let this candle finish, you can let it finish, and then you can see it's a shooting star. A shooting star by itself does not mean that the world's coming to an end. Doesn't mean the star is going to get shot, but it does suggest you're going to see a pullback. So at almost 17% profit, if it pulled back where you had 13 to 15%, it might be worth taking it. Besides, it's getting kind of far away from what we call the T-line. The T-line is the 8 exponential moving average. It's one of my favorite moving averages there is the T-line. You can learn more about the T-line by checking out the website, and you'll see some articles on the T-line there. Okay, so you know, we come back, we put a little hammer in, it runs up for a little higher, and you can see today it's starting to fail this little bit of a trend here. Or let's call it coming to an end. Heck, this thing can come all the way back to the 50. It's still going to be a rounded bottom breakout until it closes below the 50. So what we might look for here is continued move down. Might watch this area right there for support. That's also right at the 100-day simple moving average. That's that line right there. You can see it kind of hiding right there. If you start seeing some buy signals, candlestick signal, then that's what I would start looking for, and then you might get that run to the upside that tests this high and then continues its move toward the 200-day simple moving average. Another one, real nice chart here, is JMEI. And this would have been a rounded bottom right here, rounded bottom breakout. Once again, you can see the downtrend. You can see how the moving averages are proving the downtrend. That's, in fact, for our scan, that's what we're looking for. I do nothing with price when I'm looking for the chart. I'm simply looking at the moving average to make sure they're tracking down. And then we get into price over here. You can see that was a rounded bottom breakout. You can see that it failed. But, you know, let's take a chart with a little grain of salt here. Remember, moving averages are just that, averages. So, you know, if you get, what is it, 1.8 million traders, shares traded in this stock, I mean, let's face it. Averages are just averages. I would not use them ever as an exact measurement at all on a chart, unless that was your strategy. You know, you trade when it tags the 50 or above the 50, or tags the 20 above the 20, and then you're out, you know, the second it's below it, something like that. If that's your strategy and it's working, then by all means continue to use it. You can see here this did close back below the 50, kind of bounced around, and then it started up. See that low here, the high, the higher low, we dojied and gapped up. That would have been a clue to get involved with this chart. We also had a breakout of this high up here, and then you can see how it just did a normal chart pattern. a normal up, pullback, up, consolidate, up, and right to the 200, right smack on it. So here's a trade that you simply take in this area right here. And by the way, let me show you where I would have drawn the buy box. You see that doji right there? It gapped up here. In all honesty, this is the day it would have been noticed, so the buy would have been on this candle. I would have come over here, and let me get the box in here first, and then I can adjust it. Probably would have done something near that right there. So the buy would have been anything inside this area. Of course, small breakouts are okay. You don't want it to gap way up here and then chase it. You don't want to do that. So small breakouts are fine. But inside that box is where I think the best trade would have been. So let's just measure. Well, you know what? Let's take the we'll take the top end of the box, because that candle, this candle here, only came back a little bit, or opened. That would have been the time to buy it. So we'll take the top. We'll take right there, right at that line. And if we would have stayed with JMEI here, just to that high, that's 23%. I mean, right here. I mean, if you got out at the close of this dark candle here, that's 14%. Again, I would bet most swing traders would kill to make 14% trades. If you stayed in it, well, let's see, where's our 200 right there? You've got a whopping 45%, or you could have certainly taken your money, let it pull back. Notice the dojis, the little doji here, kind of a doji sandwich continuation pattern. Could have rebought it in this area, or of course anywhere in there. And then you could have pulled in another 30%. And yes, the 200-day simple moving average is a mandatory take your money. You'll find that we're not greedy over hit and run candlesticks. We're not looking for 10 million % trade. But what we are looking for is 10, 15, 20, 30% trades. That we are looking for, and those we can pull up. NES NES is a trade. In fact, you can find the video on the website. It's like a 3-minute video talking about it. It was actually featured on this day right here after this rounded bottom breakout. So featured here. If you would have bought it here and ran it up, don't worry about all the pullbacks. You'd have been somewhere in the 50% trade, something like that. Yeah, that's where you'd be right now. There we are, about 52%. Of course, if you let it pull back, if you bought more into this area, waited for another buy signal after the rally. So you have a rally, you look for that little pullback, you buy into the pullback, and then you take it up. You could have had more, or you simply trade the swings. Swing would have been, a swing might have been in this area, take your money, maybe a little swing here. There's no way to know it was going to gap, so you might have taken the trade. In fact, it was featured again on May 12th, just a few days ago, right here, and you can see how much it's gone up since the second feature. Featured here on March 24th and featured again on May 12th. I get asked all the time, how do you know to take the profits, or why would you take the profits on that swing? It's very simple. If you own it at $3.47 and up into here, you're looking at 21%. Seriously, do I need to say any more than that? 21%. This chart pattern pulls those kinds of numbers out, but you're asking for an awful lot to get more than that in one particular trade. You really are. Don't be afraid to take profits. And at 20%, you bet. Let's take them. Here's another one. A little cheapy here. Ren, you'll find the video on the website. I think this video is just a little over a minute talking about it. You can see that it was a rounded bottom breakout. Notice the big move up, the normal profit-taking pullback, and then it started moving up again. So we'll just split the middle right there up into this area. There's 60%. Why would you take profits here? 60%. My goodness. Absolutely, I want to take those profits. Actually, this one was not even featured until just a few days ago right here. And if you would have bought in the buy box right there, you're up almost 26% today. So again, take your money, let it pull back. Our target area is still up here at the 200-day simple moving average. Whew, sorry, I'm out of breath. I'm trying to cram a lot in just a few minutes. Let's see, what else do I have here? Let's look at some charts that might be setting up right now. And what I'm going to do is I'm going to pull this here, and I'm actually going to make this a little bit bigger for you so you can see the print in it. There we go. This is our scanner that we use. And I'm gonna take. We've already seen Ecom. We're going to take a look at SQM, NE, and ERJ here in just a second. We'll see what those look like. Also, we'll look at YY. We didn't look at that one. So we'll come over and let's start the bottom. Let's take a look at YY. Rounded bottom breakout here. It did a little pullback. I hope everybody realizes that anytime you get a big, what I call a big stick move like this right here, what's the probabilities of a pullback? Much greater than continuation. I know that that's not what a lot of people trade. You know, and you know, if there's rookies out here, I apologize. I don't mean to, you know, we all have to learn. We all did our thing. And experienced traders know this, that when you have a big stick like that, even if it's a bull kicker, what's the probabilities of this just doing this? Not nearly as great as the probabilities are of a move back. So this is why I never chase anything like this. If there is one that does this, and yes there are, hey, move on. There's other trades. No big deal. But I'm going to wait for that pullback, and I'm going to start buying at that bottoming area right here, and you can see what this might have done all the way to the 200-day simple moving average. So if you would have bought, we'll just kind of split the middle, and let's just go to this high right here. That's a 14% trade. Easy 14%. If you would have sold on this candle, okay, no problem. What do we have? 8% trade. Could have bought it back here again on this little doji bullish engulf, and we ran up 11%. Right now, again, this is live. This is not PowerPoint. What was? This is what is. We have a tag of the 200-day simple moving average on Q. We pull back like it should. Maybe not this much, but we hit the 200. We have a little consolidation. Very normal. We pull back. We have a inverted hammer. And we have a bullish candle, not really any candle we can put our hands around. It's not a bullish engulf. It's not a gap up. It's not. It just opened up in the middle of that hammer body, and it's up. But it's showing some bullishness. So what that might be suggesting is this could be the turnaround area right in here. So what I'm going to do is I'm going to draw the buy box just like this. And I'm actually going to come over here and drop that down right there. Yeah, that's a good place. I'd like to buy it below these two candles, below the high. To me, that's the optimum buy area. There may be traders search for this and intraday try to get lower prices. I'm just happy to get in this area here. And then what we'll do is we'll look for a run back up to these highs for about a 10% move. So that's a possible trade on that one. Let's take a look at SQM. SQM is just moving flat, but let's take a look at this trade here real quick. You can see how we have that downtrend. The 20 is below the 34, 34 is below the 50. You can see how that we're starting to turn. We have a cup, and we have what could be a little handle. By the way, the rounded bottom breakout, many times you will see the cup and handle formation on that. So as we're moving sideways here, it kind of looks like, if I can make this bigger for you, there you go. Kind of looks like it's going nowhere, just nice and tight right in this area. So that tells me I might want to be a buyer in here getting ready for it to move. This is actually SQM's coming at 1.1 times normalized volume, which I think is good. it had a volume breakout in the last 15 days of 2.3%. So that's very bullish right there. So I may have to take that one, put it on the watch list, and get ready to buy it. What's your worst case scenario here? If this was to be your stop, and you know what, let's come down and let's just go ahead and use the 50 area. No, let's not. We'll stay with a couple of pennies just below that hammer today. So if that's the stop, then a risk right now would be, what is that? Close to 2.2%. And the reward, let's get close in here. Reward is somewhere around 12%. That certainly covers 2-to-1 risk-reward ratio, 3-to-1 or more. You know, that's usually what people look for, is 2-to-1, 3-to-1, something like that. This certainly covers that. And we have a nice little cup and handle working here. So it might be one for the watch list. Let's take a look at NE. NE's kind of messing around. Let's see what happens to it, though. I do like the idea of a possible double bottom. I do like that idea. I would probably wait to be a buyer till it moved up over the T line. That's that black line right there. I would wait for that. I don't think I'd be interested in buying it here unless it did something like this, which, you know, we've got, what, 10 minutes today, so I doubt it's going to do it. But if tomorrow, if it was to put in a candle that looks something like this right here, then I would be more than happy to have an entry in this area right there. So on a good bullish stick like that, an entry inside, and then I'd look for a target still up here around that 200. Keep in mind it needs to break out of these areas. So something in the middle here. Let's see what we have. Yeah, 14.5% profit target. One of the things about this chart pattern that I like is, the reason I like it is because it has rules. Most traders, you know, they talk like they have a trading plan, and they might, but they don't necessarily follow it. And you know, we're all guilty of that. Good Lord, I'm guilty of it. Ask anyone in our trading room, they'll tell you that I'm the world's worst. I understand that, and most traders are that way as well. But one thing about this, it does give you guidelines from the get-go. So if you break those rules, you're coloring outside the lines. You know, it's like the entry. You don't enter it till it comes over the 50. You don't close it. You don't keep it. Excuse me. You don't keep it above the 200-day simple moving average. Take your money. If it continues, you can always buy it back. You can always buy it back. Let's see, that was NE. How about that ERJ? That's making a 2-day high. Oh, okay, ERJ. Let's do this by the numbers. Let's do this by the numbers. Here's our downtrend. Notice the 20 is less than 34, 34 less than the 50. Look at that 20-day simple moving average. Look at that. See how it created that little round bottom right there, that green line? And then from there it just moves sideways. Look how those moving averages have all tightened up. We have not only a bullish engulf today, but we have an engulfing candle that's engulfing the big three. Big three. Now, that to me is a very bullish move right there. That is a chart pattern that we definitely take a look at. Buying would be today, right now, right this second, or tomorrow on anything. You know what? I probably should put the line box in here. Anything like this. A close below the 50, you want to be out of it, because it means that the bulls aren't taking the 50-day simple moving average seriously. So you might want to be a buyer in here. Let's work that up. In all honesty, that 100-day moving average right here, and it comes to this lip over here, that's probably the first target on it. This is only a 7% move. It's not a chart I would probably buy because it's not enough profits. but the chart, um, I I think this is a rounded bottom breakout, BABA, and it's ripping right now as we speak. While I was talking about the ERJ, I saw it on the scanner here, just absolutely ripping. There's BABA moving up, and this is a rounded bottom breakout. Here's our gap that created the rounded bottom breakout. All this right in here is just consolidation. Really, any one of those candles in there could have been a buyer's dream. The little gap down, that's normal movement. Notice how we stayed within that big candle. That's just noise. That's all that is. Right now we're putting in a nice little bullish engulf coming off the T-line. This to me looks like a buy as we speak. Let's see what it does tomorrow. On BABA, because it is, for the most part, a pretty new stock, there is no 200-day moving average, at least not on TC2000 yet. There's not a 200-day simple moving average. But the chart pattern is exactly like that. This is very, very typical what we see for a rounded bottom breakout. And just usually there's a 200 up there. For this particular chart, there's not. Let's see. Here's another one I want to point to. Is GoPro. GoPro's another one that doesn't have a 50-day simple moving average, but here it's a rounded bottom breakout. It's one I'm currently holding, and we're doing a little possible breakout coming right in here. In fact, I recommended this to members back here on May 12th, and right about where that purple line is, today you're up 5.5%, 6% maybe, depending on where you bought the chart in there. So the rounded bottom breakout is a fantastic chart pattern. I've seen it. It's one of these chart patterns that it will give you some of the most consistent profits that I've seen in any chart pattern. And there's people that I've trained on this. They've followed it. They will agree with me. Ask them. Come into the chat room and ask them. It's also a chart pattern / strategy that produces some handsome numbers. And when you can do a swing trade at 20%, those are killer numbers. Those are absolutely killer. We talked about ERJ a few moments ago. ERJ is now making a new day high, also breaking out of yesterday's volume right now. We talked about SQM. SQM is now making a new day high at 2138. And let's see if it can take out the 20-day simple moving average. Although I believe I'm running out of time. I'm not sure how much time I have here. I don't. So what I'd like to do is I think we have a few minutes. Open it up to questions. And Reed, you're going to have to guide me if there's how to read the questions here.
Yeah, so if you're on your dashboard still, if you want to pull up where you should see chat and questions, there should be two different drop downs on there.
Questions.
And then, yep, so hit the plus button and you'll be able to see all of the questions that come in for your section.
Plus button. Well, there's an X button.
That's exactly what I'm looking at, yep.
So hit the X there on the left?
Yes, sir.
Okay, how do I...
Wait, on the left-hand side, yeah. So you're going to have a plus button, and then you're going to have an X button. On the right-hand side, there's going to be an X button, and then on the left-hand side, you're going to see a plus button.
Oh, there we go. Can you please copy the link here?
That thing that was from the last presenter, so I would start at, when did you came on at, just 1 second here. So you started at 3:15. So any question that came in after 3:15 would be directed towards you. I believe that you're looking at older questions. Do you see the timestamp?
No, not
Like,
really.
so you have question in one column, asker in the middle column. In the column, you're going to see one that says RECD, so received.
Well, I apologize. I don't use this pro. I use Omnovia, and this is totally.
I can read some out there for you if you'd like me
Go
to.
for it. Thank you, Reed. Thank you.
Yeah, absolutely. Let me go through. Do you trade the options in these recommendations?
I do not trade options. We have several people in our trading room that do, but I personally do not trade options.
All right. Um, what are the lines in the volume indicator, and do you also use it as some confirmation? So I believe that was a question when you're going through your original chart.
Yeah, this is the volume is just the volume bars. There's a 20-day moving average just so I can see what the average 20 days is. And the linear regression is just 63 days. What I do for that is sometimes I use some scans where I want to see stocks where the volume is greater than the linear regression 63 is all it is. So any one of these bars would have showed up in that area. You can do the same thing with the moving average 20 or the 50 or the 30 or the 10. Or a lot of people use different little moving averages to show what the average volume might be doing. Check out Blue.
All
I don't know
right.
if this is not a rounded bottom breakout, but anybody following Blue, this is one of our member picks right here, and it's singing. And Blue is a member's pick back here on this breakout.
I
Go
got
ahead.
another one here for you.
Mm-hmm.
So can you use the same strategy to go short?
Yes, we actually have a. I'm going to it right now. I actually have a chart rounded bottom top somewhere here. We'll see if there's a couple of them on there, which right now today there might be. So let's do this. Let's take a look at ICPT. There's ICPT. That's the exact same strategy right there. That might be set up for a short. Shield might be Lulu. I'm personally currently in Lulu. That short is working out very well. So the answer is yes. I love this strategy. And when you think about it, really all that's happening here is you're playing an oversold condition between moving averages or an overbought condition. Now, I can go into that a lot more. Today we certainly don't have enough time, but price likes to move back to its mean, and if it gets too out of hand, it will come back, or if it gets too far down, it will come back up. And that's the that's part of that strategy right there. But it works out fantastic. Here's a chart that I think may be setting up for a short low. Lowe's may be setting up. That's a nice one. And I believe they report this afternoon or tonight. And then Home Depot, they reported today, not so pretty here. So Lowe's and Home Depot, I'd be taking a look at for possible shorts. Those are two that I'll be looking at tomorrow. If I was, I'm here right now, but if I could, I probably would have shorted these today toward this afternoon, but it is what it is. I'd rather be here with you guys.